The interest rates now in the housing market, with single-family housing construction down for the second month. Fears of rising rates hurting the housing market going forward from here. We have Tim Ruud, former Fannie Mae executive, with us from Washington to talk about this. And, what is the state of things right now? We know rates are going up. They've already started to go up. And in some of these numbers, this one included, some of the ones we had yesterday, we see the effect of that, right?
We do. Hi, Connell. Nice to see you. So what you're really seeing is housing affordability is kind of collapsing. And by that, it means that your interest rates have gone up 100 basis points over the last year. You routinely see household appreciation up 5 to 8%, particularly over the last 5 or so years. And you finally get to a breaking point where borrowers really just can't justify the spend. And they're comparing it, of course, to rental properties. So you're seeing that both the volume and the momentum in both new home sales as well as existing home sales is struggling.
We're at that breaking point, or we're close to it, or does it just depend on which market? I'm sure it always does.
Yeah, certainly it's all local, but let's just take the last two latest developments. So you had yesterday you had builder sentiment come out. They were lukewarm in terms of where they saw things going, just barely above positive in the next 6 months. But traffic is now in the negative space. So they're really struggling from the new, getting the attention and the traffic for new home construction. Existing homes are also struggling. You're seeing that they're down by about 4% in terms of volume, and you're just eking out a gain on a year-over-year appreciation basis. Today you saw some numbers come out on the permits and starts. Permits, again, is one of those things that's a leading indicator. It looks very soft. You saw the number going down. And while starts are barely up, it's the wrong starts. These are multifamily starts that are meant to serve renters. And we're trying to get the millennials out of their parents' basement, out of these apartments, and then get them into home ownership for all the reasons we know we need it to.
Well, I think we're starting to see that a little bit. Now maybe it's backing off a little. Is there is anything abnormal about what's happening now? And I guess the reason I bring that up is you talked about, hey, we're in a rising rate environment. This is what we see. We get to this breaking point. But in this particular environment, is anything worrying or different?
There's so many different things. Obviously, as we mentioned, housing is local, but some of the common proxies that you would use as indicators for the healthy housing market aren't bearing out. So if you see housing as a proxy for growth, or basically the health of the economy, you've got GDP is up, you've got inflation that's tepid, you've got very confident consumers, and confident consumers buy houses as opposed to anxious ones. Their incomes are finally going up.
Not if it's about if they're concerned about the future, though, right? A lot of those indicators are backward looking, and you're talking about, housing and other. The forward-looking indicators are not as positive, are they?
Well, some of the challenges, you have demographics, which are one of these unavoidable, beautiful things for the housing market. At the moment, we have too many people under 30 and over 50. But in the next 2 to 6 years, you're going to see a huge slug of these millennials that are getting married, starting households, and that's going to be great for demand. I think some of the things that you're seeing, Connell, that are troubling are these geopolitical issues that people are feeling anxious about. You're seeing tariffs. We're not quite sure how durable and how defensible that is, how it's going to impact the economy. And then you got things like the stock market jitters. And these are hard things to rationalize when you've got all these great economic indicators, but then you look at these other things that are causing you pause, and you don't want to feel, again, anxious going into the largest purchase decision of your life.
I always wonder how individuals kind of take in those things. And I think maybe a number of years ago, the stock market, the movement in the stock market day to day was something that I think individuals watched more than they watch now. I think there's been some data to bear that out. I don't know. Maybe you have a different point of view on that, but I don't think people watch the tick by tick as much now as they did, unless you have a market like we're in now where it's, in the news every day. So I wonder how that affects individuals. The same with the trade story. Companies, yes, that affects how they plan for the future. But why, you wonder why would that affect individuals? Now, interest rates, that's a different ballgame. That would affect how people look at it.
Well, we're encouraged, too, on interest rates. It looks like Jerome Powell is now hitting a little bit of the pause button, or at least isn't so bullish about the economy. So, we're obviously ambitious. We're hopeful that is the case.
Well, you think that is the case, by the way? That's important. You think Powell's going to pause here? Okay.
I do. I think we'll still see an increase in December. That seems to be baked in the cake. But if you start to see, look, we're business owners. We're seeing pessimism all around going into the later stages of 2018, early 2019. And that's definitely going to cause some headwinds for the economy, and ultimately that's going to bear out in terms of how people feel about the economy and their prospects for this economy. But the other thing you're seeing too is
Real quick.
these first-time home buyers is that you hear realtors talk about two things: burnt out and basically sheer frustration.
Yep.
They've been trying to get into this market for so long and have had no luck.